Brad Williams, Frugal Finance. Here is just a very brief video on exchange traded funds. I have a whole bunch of different videos as it relates to mutual funds, investing. Just check out my video playlist under investing for additional information. Exchange traded funds. The summary discusses only ETFs that are registered as open-ended investment companies or unit investment trusts under the Investment Company Act of 1940. It does not address other types of exchange-traded products that are not registered under the 1940 Act, such as exchange-traded commodity funds or exchange-traded notes. The following information is general in nature and is not intended to address the specifics of your financial situation. When considering an investment, make sure you understand the particular investment's products fully before making an investment decision. This information is by the Securities Exchange Commission. Why do I use this? It's the source. I'm going to have a 30-second comment after I go through this about my opinions on ETFs. But this is a reliable source. It's not anecdotal, and it's reliable. What is an ETF? ETFs are a type of exchange-traded investment product that must register with the SEC under the 1940 Act as either an open-ended investment company, generally known as a fund, or in a unit investment trust. Like mutual funds, ETFs offer investors a way to pool their money in a fund that makes investments in stocks, bonds, or other assets, and in return, to receive an interest in that investment pool. Unlike mutual funds, however, ETF shares are traded on a national stock exchange and at a market price that may or may not be the same as the net asset value of the shares. That is, the value of the ETF assets minus its liabilities divided by the number of shares outstanding. Things to consider before investing in ETFs. ETFs are not mutual funds. Generally, ETFs combine features of a mutual fund, which can be purchased or redeemed at the end of each trading day at its net asset value per share, with the intraday trading features of a closed-end fund whose shares trade throughout the trading day at market prices. Unlike with mutual fund shares, retail investors can only purchase and sell ETF shares in market transactions. That is, unlike mutual funds, ETFs do not sell individual shares directly to or redeem their individual shares directly from retail investors. Instead, ETF sponsors enter into a contractual relationship with one or more financial institutions known as authorized participants. Authorized participants typically are large broker-dealers. Only authorized participants are permitted to purchase and redeem shares directly from the ETF, and they can do so only in large aggregations or blocks. For example, 50,000 ETF shares, commonly called creation units. Other investors purchase and sell ETF shares in market transactions at market prices. An ETF's market price typically will be more or less than the fund's net asset value per share. This is because the ETF's market price fluctuates during the trading day as a result of a variety of factors, including the underlying prices of ETF assets and the demand for the ETF. While the ETF's NAV is the value of the ETF minus its liabilities, as calculated by the ETF at the end of each business day. Types of ETFs. Index-based ETFs. Most ETF trading in the marketplaces are index-based ETFs. These ETFs seek to track a securities index like the S&P 500 stock index and generally invest primarily in the component securities of the index. For example, the SPDR or SPDR ETF, which seeks to track the S&P 500 stock index, invests in most or all of the equity securities contained in the S&P 500 stock index. Some, but not all, ETFs may post their holdings on their website on a daily basis. Actively managed ETFs. Actively managed ETFs are not based on an index. Instead, they seek to achieve a stated investment objective by investing in a portfolio of stocks, bonds, and other assets. Unlike with an index-based ETF, an advisor of an actively managed ETF may actively buy or sell components in the portfolio on a daily basis without regard to conformity with an index. Final words? Before investing in an ETF, you should read both its summary prospectus and its full prospectus, which provide detailed information on the ETF's investment objective, principal investment strategies, risks, costs, and historical performance, if any. The SEC's Edgar system, as well as internet search engines, help you locate a specific ETF prospectus. You can also find prospectuses on the website of the financial firms that sponsor a particular ETF, as well as through your broker. Do not invest in something that you do not understand. If you cannot explain the investment opportunity in a few words and in an understandable way, you may need to reconsider the potential investment. Finally, you may wish to consider seeking the advice of an investment professional. If you do, be sure to work with someone who understands your investment objectives and tolerance for risk. Your investment professional should understand complex products and be able to explain to your satisfaction whether or how that fits within your objectives. Comment if you have any questions as it relates to ETFs. This information will be linked below. Brad Williams, Frugal Finance. Thanks for watching. Hope that helped. See you soon.